Global stocks and bonds traded cautiously higher on Monday, December 8th, as investors braced for a contentious but widely expected interest rate cut from the Federal Reserve later this week. The Fed's high-stakes decision markets are pricing in an 86% probability of a quarter-point rate cut when the Federal Open Market Committee (FOMC) concludes its meeting on Wednesday. A decision to hold rates steady would be a seismic shock, according to analysts. However, the meeting is forecast to be one of the most fractious in years, with Morgan economists predicting at least two dissenting votes against a cut, reflecting deep internal divisions over battling inflation versus supporting the labor market. Global central banks in focus while the Fed dominates the spotlight. Three other major central banks are also meeting this week. The Reserve Bank of Australia, Bank of Canada, and Swiss National Bank are all expected to hold rates steady. Strong economic data has led markets to abandon hopes for further easing in Australia and even price in a potential rate hike for late 2026. Market movements. Stocks. U.S. stock futures edged up 0.2% in Asian trading. Japan's Nikkei was flat, while Chinese blue-chip stocks gained 1.0% after better-than-expected November export data. Bonds and currency. Longer-dated U.S. Treasury yields held steady at 4.14% amid concerns about hawkish Fed guidance and political pressure on central bank independence. The U.S. dollar index softened slightly. Commodities. Oil prices rose on the prospect of lower rates and geopolitical risks, while gold traded near recent highs. Looking ahead, the market's cautious optimism hinges entirely on the Fed's decision and, crucially, the guidance it provides for 2025, with significant dissent expected within the committee. The post-meeting statement and economic projections will be scrutinized for clues on whether December's move is a one-off insurance cut or the start of a new easing cycle.